Hello, client and friends. This is Peter with Wying Realty. Just want to welcome you to this edition of my e-newsletter. So today I want to talk to you about supplemental property tax. What happened was this week there was a client who purchased a property in cash and he didn't go to the title company to do all the signing. So I had to explain everything to him, and one thing I forgot to mention to him is supplemental property tax. And I was just going to shoot an email to give it to them, to give it to him, but I must as well take the opportunity to educate you guys as well. So especially nowadays, the property prices go up, and seller probably sell the property to you at a higher price than what the seller paid property tax on. As a result, the buyer needs to pay a higher property tax than the seller. So what happened is there's a very long delay, 6 to 8 months from the government, the IRS, but you'll never get away from the IRS for paying the proper property tax, right? So like 8 months after the property is closed, the IRS will ask you for the money back. So let's just jump right in and look at an example, and hopefully that explains it to you. So to make the math very easy, the property is going to be $500,000. The seller paid it, right? And the property tax is $6,000 a year, right? Price, and then when the buyer purchases it, it's gonna be seller, buyer, $1 million, and then proportionally it will be $12,000, right? So, and make the math even simpler. Okay, this is 7/1, 12/31, 10/1. Okay, so the third quarter, the fourth quarter, the seller is right in the middle. So supposedly the seller will need to pay $1,500 here, $1,500 here, right? So to make, or 2 quarters make $3,000, right? So $6,000 a year. And on October 1st, the buyer took over. So a quarter of $12,000, the buyer is supposed to need to pay $3,000 from this on, then on, right? So in escrow, title will ask the seller to pay the buyer $1,500 as a tax credit. And come September, October, you get the tax bill. It will still show up as the old amount, $6,000 and $3,000 per payment, right? So they will ask you for $3,000 right here, right? And this $3,000, of course, $1,500 is already coming from the seller. The buyer needs to pay $1,500 there, and then of course the buyer say, whoo, right? So I only need to pay $1,500, although I need to pay $3,000. I save $1,500, but that's where you're wrong, right? So about, let's see, 6 to 8 months from the time you close, you'll get a supplemental property tax bill, right? I don't know exactly how they word it, supplemental assessment, whatever, and they will ask you for the difference, which you thought you saved $1,500, but they'll ask you for $1,500. Then if arbitrary number, dates April 1st, and if you don't look out for it, it show up, you never see it, you thought it was a scam, don't pay it. The fine is expensive. I remember one time I forgot to pay, not the supplemental tax bill, but the regular tax bill. I was fined $600 per property. And I forgot like 4 property at that time. So not very ugly. I tried to protest it. They said, "Nah, forget about you. Pay me the money." So if you bought a property and your property is worth more than what the seller, at least the seller's property tax is for, please do look out for the supplemental property tax. If not, then you'll be sorry. And if you have any questions about supplemental property tax or anything real estate related, you can give me a call at 510-501-3358. And thank you very much for watching.